Going to do a quick video on order blocks, just to cover and touch on the other night. We didn't waste too much time the other night, so just a bit of a follow-up video, right? It's been a bit of a cheat sheet. Feel free to take a copy of this by screenshotting this or just whatever, recreating it. Really simple, right? So when there's trends coming down or up, there's a period in time when we may get a candle in the opposite direction, and it's only temporary. Before price continues in this direction. When we have a candle like that, usually it's in the form of a doji or something small, usually small. Sometimes there are big ones, but usually small. We just want to take note of that particular candle because it's where bulls try to defend and a bit of reaccumulation or redistribution happened, right? So a few people bought, a few people sold, and then price carried on down. So what that means is when price comes back to that level, there's going to be a bunch of people with orders looking to get out there that brought. So they originally brought here, right, and then price went down. And then when price came back up, a lot of them are going to probably try and break even, right? So that creates some downwards pressure. The trend was already down, so we've already got downwards pressure again. So at that point in time, it becomes a confirmed level of resistance once we reject that at one more time, right? So and then usually you get continuation down to the downside. If you're sitting here and you're bouncing backwards and forwards but making higher lows while under it, there may be more like an accumulation pattern where it ends up claiming it and carrying back on. Okay, but it's really simple in how they're formed, and then how price reacts to them usually afterwards. And I'll show you an example shortly on the actual charts. And then let's say a period of time has passed. In this case here, it's 5-6 months, and then price comes back to this level. The first time it reaches this level, it's probably going to reject as well, because people look left and see, okay, it's been at a level before, they're going to be cautious and probably take some profit here, which creates downward pressure. But the trend is up, so usually the trend gets brought back up, and then we'll attempt again. These can sometimes consolidate and then go, right? Or you can just break straight through. It depends on the time frame, depends on the severity of it and the rest of it, right? So with that, have a quick read of these if you haven't already. You can pause the video to do that, and I'll just carry on back to the actual chart itself. Here, right, clean that off, and I'll just identify a few. So myself and Kyle have found they best work on the weekly time frame and the daily time frame. However, they are on all time frames, but the severity of them or the strength of them, higher the time frame, the better. So in the example I just gave you, of the downwards trend, right, there was one little candle there in between that stopped, and then it consolidated for a period of time. So money changed hands in this period, and when it came back up to it, right, trend continued, and the people that had brought here, if they hadn't sold in this mess, then sold at break even. So it just creates continual pressure, supply and demand zone. How I go about identifying these and then marking them on my chart is two different ways. Alright, so first I've got the horizontal ray tool. I personally use the ray, where is the horizontal? This one, horizontal ray. So the ray tool can be used in all directions, where the horizontal one can only be used horizontally. So I use the horizontal one, and the reason for that is when I mark the bottom of this, it actually puts the exact dollar value over here on the right, and I want to know what that number is, so I use that, and you can do it top and bottom. So we know in between that price point is a bit of a neutral zone. Below it is resistance, and above it will become support if we breach it, hopefully, right? But we can also see that when price came back up to this level on this chart, that it was front run a little bit, right? But we can see that the wick of this one is the exact top of that one. But what I want to do is actually adapt my order block. So originally it would have been just this candle, okay? And we would have taken that to the right using the rectangle tool. So I go into the rectangle tool, and click on the top, then drag it down to the bottom. So I end up with those two dots. I double click those two dots, which brings me up these fields. And what I want to do is change the coordinates. Now these coordinates, I can show you, if you change this to say minus 500, it'll draw it left. If you change it to 500, it'll draw it out to the right. So just to keep a clear, clean level, I use the coordinates to drag it across instead of using my hand-eye coordination. But as we can see here, the candle bodies lower than what this one is. So what I want to do is actually want to bring this down to this one. Okay, so I'm going to delete the original order block I had, and I'm going to customize this one. So I'm actually going to make it so that period in between there is the order block. Alright, so we can have it drawn like that, or I can drag this back now so it shows me the excess, which is where it came up to here, and now that's a nice clean level for me. Okay, so